Welcome to the video on tax-free savings accounts, TFSA for short, presented by PAPE Canada. So in this video, we're going to discuss the tax-free savings account and its various attributes. So the TFSA started up in 2009, and it was mainly as a response to, 2008, 2009, there was a very big pullback in the market, and we had a worldwide recession. Many Canadians were taking money out of their RSPs, which is a taxable event, and so this was no longer the plan that was right for everybody. It was Mr. Jim Flaherty who introduced it on behalf of Canada and said, okay, this TFSA, we're going to start off, we're going to let you put $5,000 into the account. This is post-tax money, so you've already earned an income, paid tax on it, that's what's in your bank account. You can put up to $5,000 a year, and whatever happens inside the tax-free savings account, interest, dividend income, capital gains, whatever it is, there's no tax. When you take it out, there's no tax. And so here we are now, we're about to turn the calendar into 2023. In 2009, 2010, 2011, 2012, for 4 years, it was $5,000. That got us to $20,000. 2013 and 14 was $5,500, another $11,000. 2015, it was $10,000 for that 1 year. We had a change in government. 2016, 17, and 18, it became $5,500 because they put it back to the previous amounts. And that got us to $16,500. 2019, 2020, 2021, 2022 was $6,000. That got us to $24,000. And we expect for 2023, given it hasn't formally been announced, but the numbers that are used to calculate the inflation and the limit for next year, those numbers have been published already. We know it'll be $6,500 for 2023. So, for somebody who was 18 years old or more in 2009 who's never contributed to a tax-free savings account, how much can they put in? 20,000 plus 11 is 31,000, 41,000, 57,500, 81,500, and of course, plus the 6,500 for next year. By next year, 2023, anybody who is 18 years old or older in 2009, they will be able to put $88,000 into a tax-free savings account if they have never utilized the plan or made a deposit. Very importantly, to qualify to open a tax-free savings account, you must have a valid social insurance number, you must be a Canadian citizen or a Canadian resident, and you must be, of course, 18 years old. Now, in certain provinces, you don't have the legal ability to go and open the account to contract, to sign a legal document until you're 19. And so I went ahead and I looked it up. The legal age to open a tax-free savings account in British Columbia, Newfoundland, Nova Scotia, New Brunswick, and of course the 3 territories, Yukon Territory, Northwest Territory, and Nunavut, is age 19. In all other provinces, it's age 18. For the provinces that it's age 19, you still will obtain the full contribution room or deposit amount for the entire year, no matter when your birthday is during the year. If you can open the account at age 18, that's fine. If not, you do it next year. You'll have the room from last year and this year. Alrighty. As an example, if during 2022, somebody is living in a province where 18 is the legal age that they can do it, that they can open the account. And remember, the maximum is $6,000 for 2022. So they turn 18, they go in, they meet a financial advisor, they open a tax-free savings account, and they start by making a deposit of $3,000. And that's in February or March or whatever it is. Their birthday's in January. And then they do a withdrawal for $3,500 because their investment increased in value. Well, assuming they don't make any other deposits, no other withdrawals, that's the entirety of the account, next year they're going to be, first of all, getting the new room for next year, which we know is $6,500, but they're going to be given back the amount that they've withdrawn. So what happened? They had the $6,000, they put in $3,000, they have $3,000 left, plus the withdrawal of $3,500. That's on January 1st of the next year. We'll come back to that. Once the withdrawal is made, they can still make other deposits so as long as it doesn't go over the $6,000. And we're not going to net it out throughout the year. From January 1 to December 31st, we include only the deposits. If you deposit more than your limit, you will be subject to a penalty. People argue and they say, yes, but I withdrew it, and you're right, you did withdraw it. And what happens is that on December 31st into January 1st of a new year, then we will go and count the withdrawals. And we will return those amounts to you, to the resident, the citizen, to you as a Canadian or the plan holder, as new room to make a new deposit. So I'm going to go over that just one more time. At the beginning of the year, you will have so much room to make a deposit or a contribution into a tax-free savings account. We will count all amounts deposited throughout the year. However, the withdrawals will only be counted at the end of the year for next year, January the 1st. So imagine somebody turns 18 years old, they go ahead, they open an account, they put in the full $6,000. And unfortunately, they take on some quite risky investments, and it declines in value substantially. And it's worth $1,000. And they make a withdrawal. And so 2023 starts up. We have the new $6,500, and we have to go and add back the amount from last year. Again, we add back the amount withdrawn. We do not add back the full contribution room. Had the amount withdrawn, had the investment really worked out well, had the amount withdrawn been, let's say, I don't know, $20,000, well, then they would be given back the $20,000 of room in the next year. But this didn't happen because they made a horrible investment, because they were 18 years old and they said, let's buy some options, and the options didn't quite pan out. Unfortunately, these things do happen. And so what happens is that the amounts deposited are counted right away. The withdrawals throughout the year are counted once at the end of the year, with the amount returned back to you next year. I think we've gone over that point in enough detail. Alrighty. Inside of the TFSA plan, there are a number of things that you can do. You can hold cash. You can hold a guaranteed investment certificate. You can hold mutual funds or exchange-traded funds. Or you can go to a brokerage house and you can put individual stocks or securities in there. You can even do options like calls and puts. So people always ask, well, you know, my mutual fund this, well, hold on. Notice how fast I'm speaking. A lot of people don't differentiate between the different investment opportunities, the products, versus the plan types. A tax-free savings account, just like an RSP, an RESP, or an RDSP, those are plans. Depending on what financial institution you go with to open the plan, they may be able to offer you only cash and guaranteed investment certificates or only mutual funds. Or if you go to like a discount broker or a full service investment advisor, they can offer everything, all of the products, okay? So like it or not, we need to differentiate between that, okay? Alrighty, we covered that, we covered that, we covered that, we covered that. We need to discuss how they're transferred as well as the beneficiaries and successor annuitants. So let's say you go over to financial institution number 1. I'm very bad at art. And that's a window, that's a door. And so you have a tax-free savings account over here with financial institution 1. You want to move it over here to financial institution number 2. Happens all the time. Now, there's one of two ways of doing it. The correct way or the best way of doing it, especially if you're invested in stocks or bonds or securities, mutual funds, where the market is fluctuating, you don't want to be out of the market in case it goes way up during the time that you're making the transfer. So you want to do it directly from one institution to the other. That's done on a form called a T2033. It's the form that's used to transfer RSPs as well. You just tick the box for tax-free savings account. The way it works, you go into the new financial institution, you say, look, here's my statement from the other place, I want to move this over. They'll fill out the form, they'll fax it over, that's how it's done. If you're sitting there going, no, I just want the money in a GIC or a savings account, and you don't want to pay a fee to transfer it, what you can do is, let's say in December, you withdraw the entire amount, you let it sit in your bank account for a month or less, the new calendar flips over, it's January, then you can go and deploy the money or deposit it into a new TFSA yourself. If you're only going to be purchasing GICs or putting it in a high yield savings account, that can work okay, but the best way to do it is with a T2033 to have the institutions do the transfer for you. Last up, in all provinces except the province of Quebec, which because it's the civil code in Quebec, they don't allow for a beneficiary designation. In all provinces except Quebec, you can have a beneficiary, and if that person is your spouse, they will also be the successor annuitant. Here's what that means. It can only be the spouse, okay? Actually, I'll get to it in a moment. The beneficiary can be anybody. If I open a tax-free savings account and I'm not married, I could name, anybody who I want. I could name a niece or a nephew, I could name a friend of mine, I could name whoever I want as the beneficiary. If I were to die tomorrow, what would happen, instead of this amount being subject to probate, I don't have to worry about that, neither does the beneficiary. The beneficiary will say, here's proof of death, the death certificate, and the financial institution will cash out the investments, write a check to the person. They will take that check with money that is theirs. It is outside of the TFSA. They can go deposit it into their bank account and do whatever they want with it. If I don't name a beneficiary, the entire amount inside of the plan has to be deregistered. It becomes part of my estate and is subject to probate. It could take months for it to go through for my beneficiaries in my will, if I have one, to get access to that money. If I don't have a will, it could take even longer. If, however, I name the beneficiary to be my spouse, they are both the beneficiary and the successor annuitant. And this is where financial planning is very important. If you have, the $80-something thousand we talked about earlier, contributed, deposited into your tax-free savings account, plus the growth, you could have $100,000 or more inside of that account. The returns that are not subject to taxation, you want those to remain inside of the plan, not subject to taxation. So by naming a successor annuitant, which can only be your spouse, if I did that and I were to die, my spouse, he or she, could take over the account as is, meaning if I have $100,000 inside of the tax-free savings account, they would transfer it into their tax-free savings account, and that $100,000 would remain tax sheltered. And so naming your spouse as the successor annuitant inside of the tax-free savings account or on the account is a very important financial planning tool if you're able to do that. Again, you can do it if you're not inside of the province of Quebec. It's very important to understand if you are inside of the province but moving to another province, once you take up residency in the new province, then you change your beneficiary. At the same time, if you're not living in Quebec but decide to move there, your beneficiary is, even though it might show on the statement, it's invalid. And so if you were to take up residence for 6 months or a year and change your address and then leave, even 5 years later, you have to fill out the form again, even if it's the same person, just to make sure it's valid. Just a good housekeeping tool to make sure that everything is above board and will meet the standards once the time comes. On that, you can leave some comments in the notes below. If you have any questions, you can put them in the notes below, in the comments, and we'll speak to you again soon. Thank you for watching.